Hello traders, this is Frank Paul from Forex Mentor welcoming you to this latest weekend complimentary video presentation. Today we're going to take a look at the FXM Trend Trader product and service. Last week we talked a little bit about our just then released new COT Market Watch service, so we're kind of switch hitting back and forth looking at those two trading resources. I'd just like to focus on a really great opportunity that materialized not once but twice this week, the Euro-Yen long pair. Obviously, you know the yen quote pairs are on a substantial uptrend. I mean, anybody can look at a daily chart and can conclude that. But even within a strong uptrend, it's very important to time your entries well because there is intraday noise. There are retracements along the way. You can't just jump in any old place and expect to have a favorable or profitable result long term. You really have to look at all the different time frames top down and determine where resides a good entry point that you can jump into with a very tight stop to keep your risk at a limited amount. So that's what we're going to talk about today. Just a quick recap, what's this FXM Trend Trader thing all about? Well, I could go on and on for hours, and in our foundation course, which is available in our members area, I do. But for now, we can summarize it very succinctly by stating that we need a 3-screen MACD histogram slope reading to confirm a strong trend reading, and we find that on the daily 4-hour, 60-minute time frames. A MACD histogram slope is when you have the latest two bars waving higher or lower on all three of those time frames concurrently, which is not always an easy thing to line up in real time, which is why we have this tool called the Momentum Matrix, a listing of 25 different currency pairs giving you the real-time reading on that particular metric. Now, just as a quick footnote here, our tool is synced to midnight GMT. And just so you know, if you're wondering, if you work with a charting platform that is synced to an offset, a GMT offset, a different time zone, perhaps reflecting your broker's business hours, what have you, you might get slightly different readings. The way to deal with that is simply use a free charting platform like MT4 from FXCM UK, which is synced to midnight GMT, or some other alternative. In the worst case scenario, you could use this as a rough guide and just continue to execute on signals as they materialize in your own charts. We should never be out more than an hour or two in terms of when the signals line up. But just so you know, there is always a timing issue when you're looking at signals generated online like this. So just thought I would mention that in passing. I won't show it to you now, but it's a nifty little tool that gives you, again, the momentum readings based on the MACD histogram slope concept on all three time frames. It also gives you potential entry signals on the 1-minute chart, validation signals on the 5-minute chart. They are never to be traded in a passive fashion. The momentum matrix is not a trade alert generator. It is a signal generator which tells you when we have the confluence of chart indicators lining up in a way that suggests a potential trade, but as we stress over and over again in our learning materials, you really have to take a moment to validate those signals with respect to market flow analysis, which is not that difficult an undertaking once you've taken the time to learn it. Okay, so market flow, market structure, very important to vet the signals. Then if everything is still looking good, we drill down to the 5-minute, 1-minute chart pairing, looking for a particular crossover signal on the 1-minute chart, a particular validation signal on the 5-minute, which allows it. And then trade execution and management reflects a 4-part scaling out approach, which reflects the philosophy that we can't know for sure how far the market's going to go in our favor before it turns against us. And if you were looking at any of the euro pairs today, boy, that was proven in spades. Euro-yen, which we're going to look at in just a minute, gave us a nice little up move, and then whoop, a sharp sell-off later in the day, Friday, and then it rallied again late in the day. So one way around that is to use ultra-wide stops, but if you're going to do that, you have to reduce your position sizing to almost nothing to offset the higher financial risk. So we suggest tight stops, and we suggest trailing those stops by way of scaling out. We employ a 4-lot or 4-part scaling out order. Take your single undivided prudent position sizing, divide it into 4 equal size orders, and then scale out each in sequence. First, the scalping target it's not really a scalp, it's more like a small day trade objective of 30 pips, then the day trade, then the swing trade, then the position trade. And we have an EA tool that can be used for semi-automation purposes. We do not advocate using it in robotic mode. We just absolutely do not and will not ever recommend that you do that. But when you manage this tool to just simply make the process of finding entry and exits easier, it can definitely be a time saver. So that's pretty much it in a nutshell. And before we turn our attention to a quick chart review of Euro-Yen, I just wanted to bring up a recent update from one of our members, George Pitcher. This is the email I received from George earlier today. I've just removed his email address from this message in respect of privacy issues. So it says, "Hi Frank, we had a great week where we gained 838 pips. I did close out Friday's trade since I'll be away from my system today. Our grand total is 3,161 pips. That's from launch in late November, which is an average of 351 pips per week. I've been keeping the database for 9 weeks. I think we had 2 weeks off over Christmas, so it's not a truly cumulative result. It just reflects George's availability. But nonetheless, a pretty good result for this week. And the Excel spreadsheet, which he's passed on to me here, represents the performance tracking that he keeps for us each week. He's trading this methodology in his account, and you can see that we've got 3,161 pips net showing at top here. And this spreadsheet is available in a slightly easier to view format in our members area of our website, so you can check out how we're doing there. I think what we'll probably end up doing is creating a link on our public homepage so you can access this information just the same way as our members do. But I'd like to thank George for taking the time to let me know. He did pretty well this week, and I would assume part of that is predicated on Euro-Yen. So keep in mind, he's booked 838 pips, but that's just based on the idea of closing out open trades at week's end. You may or may not want to do that yourself. Personally, I tend to take the view that if I have a floating profitable position and I have a strong daily chart trend reading still intact, I'll keep it open over the weekend, with my stop trail to break even. So it all comes down to personal preference. Some people like the closed trade heading into the weekend, some don't. So wherever you net out, still, I think our system did make available some opportunities. So thanks again, George. Appreciate the update, and you can check out George's data at any time in our members area. Before we get to our quick chart recap, I just wanted to show you the extract for the Euro-Yen pair that appeared in our daily market flow report for members on Wednesday. You can see the date here, Wednesday, January 30th, 2013. And we showed very clearly that there was an uptrend continuation pattern underway, A up to B, that's an impulse wave, B down to C, that's a correction, albeit a very shallow one, to the 23.6% Fibonacci retracement off of 122.91. And then price was already breaking a monthly resistance level from April 2001, this dashed red line, by the time we got to this update. So everything was just suggesting bullish breakout left, right, and center. Our comment on Wednesday was as follows, quote, "We correctly forecasted a 4-hour uptrend continuation yesterday," that is Tuesday, "and the bullish 3M signals with 1-minute validated entry long signal as at January 30th, 8:23 a.m. GMT at 96.43 produced closed profit on the P1 position plus 30 pips, but the remaining 3 lots were subsequently stopped out at break-even due to some extremely noisy intraday action occurring around the New York Open. Still looking on the long side, however." And if you're a member, you know that this trade call pending long has some significance. It tells you that you can simply flip the switch on to activate the EA for this pair, set the bias to long, although that's a technicality here because I don't think it's going to find a short. But it doesn't hurt to remind yourself you're trading only one side of the market. So set the bias switch to long, and it'll look for the signals which line up for a long trade. And happily enough, that materialized into Thursday's session, so that by the time we get to the follow-up on Thursday, here's what we had to say in regards to this 1-hour chart now. It looks very similar to the setup we just considered on the 4-hour, but it's actually a different one. This is the hourly chart and is more recent. So our comment was as follows. On Thursday, the bullish confluence of events we were looking for this time yesterday occurred today, with a 3M long entry signal on the 1-minute open for Thursday, 4:28 p.m. GMT at 123.87. Aside from intraday noise and small-scale pullbacks, there's no sign of anything but a continuation in the daily chart uptrend dating back to November 13th. Still looking to buy the dips. Okay, so 2 days in a row, Wednesday and Thursday, we said look to buy the dips. Set the switch on. Let that EA help you find the entry point. So what I'd like to do is, I don't have any data there. So let's just skip this page and go straight into chart mode. And I'll take you back to Wednesday, and maybe we'll quickly recap Friday's action as well. The particular confluence of events that enabled a long trade. Okay, here's a 4-chart tile display for the Euro-Yen pair. We've got the weekly chart top left, daily top right, 4-hour bottom left, hourly chart bottom right. I think we'll just gloss over the weekly chart for now. Really interesting stuff going on there, but not directly relevant to the setup in question. So I've drawn a dashed vertical line through Thursday, January 31st, and the wee hours of that session, if not the day prior and day prior to that, we had this phenomenon here, the bullish slope reading on the MACD histogram, each bar waving higher. Okay, and that's the basic metric we're looking at. Now, obviously, in terms of market flow, no doubt whatsoever, we're also dealing with an uptrend. But we have to keep in mind that even within an uptrend, we can get soft price action like we saw, for example, here, which is not necessarily easy to trade. Those look like tiny little dojis, but within them there was enough intraday noise that you could have gotten stopped out. So we're looking for a market that's really moving, not only longer term, but near term. And we certainly had that into midweek, Thursday, and even end of week. And I'm showing you the juncture. Actually, this is right here is 4 p.m. GMT, January 31st. Okay, and we've got a 2-bar bullish slope reading here too. In fact, if we just drop them underneath, doesn't matter whether they're bullish bars above zero or bearish bars beneath, as long as they're waving higher. And so they are right here, 4 p.m. GMT on the 31st. And there is 4 p.m. GMT on the hourly chart. And once again, we can see histogram bars waving higher. That happening just as price is breaking an old B level to the upside. Okay, so it's looking really good. And from there, we drill down to the 1-minute chart. Anytime thereafter we get that signal lining up in 3 time frames, we look for a counter trend MACD reading resolving to trend by way of a crossover above the 0 line from below, as long as that's also validated with a bullish MACD reading on the 5-minute chart. I'm going to fast forward now to today's date. Okay, we already mentioned the timestamp. You can just go ahead, take that, look, peruse your own charts just to prove it to yourself that it lined up where we said it did. And so from about right here, let's just round it off, say 124, prices come up just shy of 127 today. So we had bits and pieces of a 300 pip move to enjoy. And the position trade component of our 4-part scaling out order is sitting on really nice floating profit here. But now fast forward into today's time frame, and I'm just going to drop another vertical line through right here, midnight GMT, because that's where we got another happy confluence of this bullish slope reading on the MACD histogram on the hourly, 4-hour, and daily charts. Price had moved enough so that your stop was to break even. So this is a great place to scale in or pyramid into the trade. So on today's chart, this is what it looked like on the 1-minute time frame. Here is this counter trend reading that we're looking for. This is a simplified MACD. It's the differential of the 10 and 20 period EMAs. It's not the usual 12, 26, 9. And we furthermore stripped away the MACD signal line. We're simply looking for crossovers above or below 0. So counter trend reading, MACD below 0, painting in red. When it crosses back above, that's our entry signal, as long as we've got a bullish reading on the 5-minute chart, and of course as long as that bullish reading is still intact on the MACD histogram on the 3-hour time frames. So we drop a protective stop 20 pips below. If you find that's too tight, you can always widen it on a discretionary basis. Our EA tool does allow that. And so from here, I'm going to say with spread in, we're in at 124.81. The first objective we're looking for is 30 pips good to entry, which happens right here, 125.11. And that allows us to book 30 pips on the P1 portion of the trade. It also allows us to trail the stop to break even on the remaining 3 legs. So all we need to render at worst a break-even result is price to move 30 pips good to entry. Now that's not always easy to do. Sometimes it's easier said than done. But when it accomplishes that feat, which should be doable in a strong trending market, then we're home free. And that juncture happened right about here, for a little after 4 a.m. GMT. Price came up, triggered the limit exit on P1, trailed the stop to break even on the remaining 3 legs. So if you weren't in the market still watching, you didn't have to worry about it. The EA tool did the rest, or at least the instructions it sent to the dealing broker's platform. Then the next target is all the way up here, 126.32. That's our projected high for the day, which we attain by, well, I do it very simply and easily on my own daily chart. I've got a custom indicator down here in the bottom, and it simply takes the current 5-day ADR figure and adds that to the actual low for the day. Actual low plus 5-day ADR equals a projected high. And so that target was 126.32. Today's actual high was 126.97, so it beat it by 60 pips. But you know, we're not going to cry over spilt milk here, because A, we can never predict with certainty just exactly how far the market will go. Getting the direction right and the timing right is good enough. B, we have floating open position trades, 2 of them in fact, one from Wednesday and one from today. So we're still in this game and still hanging in there. Okay, so that's basically how we arrive at this objective, 126.32. And was it hit later in the day? Notwithstanding a very sharp pullback that came to within 3 pips right here, within 3 pips of hitting that break-even stop. Later on, price regrouped, rallied right up to 126.32 and gave us something like 150 pips profit just on the day trade leg, which was really nice. Okay, so I know I'm a little bit scattered here, going from one day to the next and one entry to the next, etc., etc., but I just wanted to give you a sense of how, first of all, how we read momentum top down, how we drill down further to get a well-timed entry point with limited risk, and how, most importantly in this case, when you have a strong trend like the yen quote pairs in an uptrend, don't look to book profit faster than you need to, because you know, blink for a couple days and you've got another 500 pips floating profit. So, you know, you can certainly pyramid into the position and magnify the profit potential, and that was absolutely the way to go this week on the Euro-Yen pair. And that's our look at our charts for today. And that's a wrap for today. I hope you've enjoyed this presentation. If you'd like to learn more about FXM Trend Trader, you can check out the URL shown at top, forexmentor.com/FXM Trend Trader. And or you can follow us on Twitter, the search term there at FXM Trend Trader, or the URL twitter.com/FXM Trend Trader. Of course, if you have any questions or comments, you can always feel free to email me directly if you wish via frank@forexmentor.com. I hope you enjoy the rest of your weekend. Thanks for joining us today, and I hope also that we can look forward to crossing paths with you very soon. Thanks, and bye for now.